Here is a quick video on how to get sales tax properly calculating and showing up in reports for anyone migrating from Intuit QuickBooks Desktop to one of their popular online plans. Following your data migration, go through and check your data and also ensure that the sales tax reporting feature is set up in the tax section. Then move on to step 1. Stop using the sales tax rate brought over from your desktop version, and instead allow it to calculate the appropriate rate based on the location of whoever you're invoicing. Of course, you also need to have that person or entity properly set up as a customer along with the sales tax settings following your migration. In this example, a New Jersey company was migrated from desktop. The tax rate used by the desktop version displays as a custom rate. Stop using the sales tax rate brought over from your desktop version. Allow it to calculate the appropriate rate based on the location of whoever you're invoicing. Step 2. Set up your products to be taxable or not. Step 3. Always check the tax column on the invoice. That way QuickBooks will include the total amount invoiced as part of the gross receipts calculated in your sales tax report. Whether or not the customer is actually charged sales tax will be determined based on how the items sold and customer are both set up prior to generating the invoice. That's the key to the magic which has many confused when getting accurate sales tax reports using QuickBooks Online.